And now I'm going to look for ES to come out and take out all these 50-minute highs up here, right? And like I said, for NASDAQ, I want to see if we can make a run above opening range highs here, okay? If we're lucky and we have some smooth movement here, that's what I'll be a part of, and it'll be nice, okay? All right, and then on the opposing end, I'm going to go ahead and I'm going to map out. You guys already know the deal here. We have hourly wick. Okay, preferably we're all going to come down to 25%, so that's what I'm going to map out here. So we have our wick quadrants, and on the opposing end, we have hourly gaps. So we're kind of in between those two levels. So immediate rejection away from the short-term highs here. Still kind of continuing that high resistance state of the marketplace following this retracement here. So let's see if we honestly see if we can just clear out these internal lows here, working the wick on the hourly chart, and then create an expansion. So that's where I can high probability environment. That's what I'll look for anyway. So in an ideal scenario, like I said, would just be a sharp drop down. Okay, taking out these short-term lows, right? So whenever I see a gradual build up like this, when it's just high resistant, like a lot of times, this is the type of phenomenon I'll see. It'll come down, take out those who have been buying early, right? And then actually create the real expansion in price. So coupled with the short-term lows being taken out here, we have reclaiming this for rag gap and also working in the wick quadrants that I have annotated here. And then from there, the only thing that would really get me long is a smooth expansion up off of these lows. And then in between that, I'll look to execute on the breaker here. Okay, as well as whatever for rag gap may be created in this range here. But that's only if that were to take place. That's the only thing that would entice me to take a trade. So, I mean, obviously a beautiful reaction above for that 25% of the wick, right? And then also taking out the short-term lows. Like anytime price contracts like this, and it's high resistance to the upside, this is the type of stuff that you can expect. You can expect the short-term lows to be taken out. So, how is this useful? Well, it's useful in two ways. You're going to be anticipating the real move to ensue, which it is now, after it does this, right? And also, if you're already in an active position down here, right, you shouldn't be trailing your stop loss aggressively below the respective short-term lows here, right? So you should still give your stop loss leeway and understand that this type of thing can happen. So I mean, one of the two things it can do here, it can just slam straight up, or it can drop down, reaccumulate one more time, and then obviously create the rally. We'll see. All right, so I'm gonna go ahead and buy that. Stop loss go below. And then I'm going to go ahead and target. So we come up, match the highs. We expect that to act as a form of engineered buy side liquidity and then finally complete the move above the high there. Okay, ES did complete the move, but we, obviously the main draw is going to be resting up here. Using this for rag gap as reaccumulation, looking for it to complete the move above, right? So we have several potential targets here, which would be the highs up here, time-based. And then obviously the remaining portion of this regular trading hour gap, and then ultimately the London highs. Okay, so we do obviously have a prominent 5-minute for rag gap here on ES, so you see it retracing down into that, which is completely normal and fine, which actually I prefer to happen. Okay. Now, as for NASDAQ here, we have the same deal here, which is obviously my stops weathering this 5-minute gap. I don't particularly want to see this 5-minute for rag gap traded down into. There's always a chance for it to happen, which is why my stops resting down below, right? But ultimately, I'd like to see it really just kind of work in this wick and then expand above the highs. Okay. And then if it were to drop down to this 5-minute gap, like I said, it's fine, but I really would need to reject away from that rather quickly. But anyway, still the first level of our targeting here on NASDAQ has yet to be reached. We're going to be expecting it to continue there. And once we're able to get that push above these highs here, right, and we get above these highs here, stop's immediately going to go to break even, okay, once we get above these time-based highs. So I believe we just institutional order flow that 5-minute for rag gap. So this would have been a preferable entry lower than obviously the one that I have now. But that's good. I like how we institutional order flow that. We bumped out this short-term low. Now I want to see speed up off of this wick up into time-based liquidity. NASDAQ trading down to the 5-minute for rag gap here, and then here's just these two black lines extended forward. That's that hourly for rag gap extended through. So I want you to take a look at these two respective wicks side by side here. So we create buy side here, sell side here, extend that range through. This here is a balanced price range. Okay. So below the for rag gap, it's fine if it trades down into that, but you really don't want to see it trade beyond this range here. So about the midpoint of the balanced price range here with respective wicks, you extend that through. Here's midpoint. We just tap that. I want to see sensitivity away from that if we're on the right side. So stop loss is weathering this 5-minute gap. Obviously, I wasn't thinking it was going to give me a 5-minute entry point like this, so I wouldn't, prefer to be able to enter it here and then have my stop loss below. But, given the speed that we're currently having, I was thinking it was just going to be a smooth ride up into the highs. But in this case here, it just comes down, bumps a short-term low, right? And works in that 5-minute flag gap, which is completely fine, right? I don't see anything wrong with that. And yeah, same deal here on ES here. I mean, it left behind a ridiculous 5-minute gap. So the fact that it retraces down into that, I mean, that's good. All right, so obviously retracing a little bit deeper than I want in this 5-minute gap. But I still view this as a normal retracement. I know this is a reasonable retracement, but obviously, it's like right now where we're at, this is that uncomfortable state in the marketplace where it's like you're in drawdown, right, and you're kind of weathering a retracement. So I mean, you just have to stay calm, poised, and collected, and it's not going to be much of an issue if you're risking what you're willing to risk, right? If you're risking something that you're not willing to risk and you place a lot of significance on that money, obviously, you're going to be feeling very emotional, right? But at the moment here, I mean, with this retracement, how much time we're spending here, I very well could get stopped out, and I'm okay with that. I'll be accepting of that and move on to the next opportunity. But I still view this retracement as pretty normal inside of a bullish buy program, right? And like I said, this is that uncomfortable state of the marketplace where it's like you're just kind of waiting. Now, in this context here, why would I be comfortable with my stop down here, right? Because if it trades down and completely closes in this breakaway gap here, right, I don't want to be in the transaction anyway. So I'm paying my stop loss to take me out of this transaction. And then, like I said, we have a 5-minute gap. We have a 1-minute gap here, which really should have utilized that and took it to the highs, but it didn't. It trades down. And then we have this balanced price range, right? If we break through that balanced price range and trade in the gap, it's like, oh, okay, well, can this juice overflow that, bounce off of that? But really, you don't want to see it trade past this balanced price range, okay? So once again, just that really, that uncomfortable state of the marketplace here. And, if I fear my stop loss getting hit, I'm probably going to do things emotionally right now. Like if it hits my stop loss, that's fine. It's one singular transaction. I'm okay with it. I'm risking as much as I'm willing to risk. And that's it, okay? And notice where the take profit is relative to where the stop loss is. Okay, I want you to always keep that in mind. But anyway, I like how we're sitting on top of the hourly gap. So I like how we shifted above these down candles here. I'd like to see if this can kind of set the stage for a run above these highs here. So I mean, ES retraced a little bit too deeply, but NASDAQ, I mean, really just looks normal to me. So really what it comes down to is, can we steamroll past this inversion for value gap now? Okay, nice. Let's see if that can continue. So anyway, I obviously like this expansion here. I want to see this continue, get above these highs. I mentioned to you guys that I'm going to go break even as soon as we pierce through these highs here. All right. And I mean, even with our, less than satisfactory entry point, 42, I mean, this offers a little 23 handles here. So on one contract, I mean, that's obviously enough for, profit taking. So good expansion here. I don't really want to see it slow down here now. I want to see it really just pop above these highs now. So what I like here is that we created the change in state delivery above the down candle here, and then following that, we just phased through completely this inversion for value gap, and then we match this short-term high here, right, generating more short-term buy-side liquidity. I mean, just generates these highs here. So, I mean, even if I was trying to frame something against myself, I wouldn't be confident in that because I would like to see this be taken out first before I look for a reversal. All right, so, I mean, reasonably, we trade down to the volume imbalance, so that's actually good. Okay, I want to see that be utilized as support. So anytime we create a volume bounce like this, there's always a good chance for it to, obviously be worked back in like that. So I like how we work back into the volume bounce here. Now, what's the key here is how we actually utilize it. All right, so it's working in this 15-minute wick, which is fine. Okay, but that's really the last thing I want to see it do. I kind of want to see it stop there. Hey, like I said, seriously, like I'm not giving anyone advice to trade their own money. Okay, that's, only you, only you are going to be able to have the confidence inside of yourself to know when you're ready to do that. And when it comes down to it, yeah, you know yourself better than anyone else, right? And as long as you don't care about the money that you're trading, I think it's fine, right? So if you lost that money or was burned, you wouldn't bat an eye. That's the type of thing you need to look at it at. Okay, if you don't care about the money that you're trading, it's going to be a lot easier to actually run that equity up. Okay, so we should have a smooth ride up into the highs here now at this point. Like I said, once we do pierce these highs, that'll be about 25 handles. So if anyone wants to take partials or profits there, that's I respect that. And then I'm going to move stop loss up to break even. All right, so kind of the same boat as the previous expansion where we were looking for the trade in the highs, right? Just comes up, matches the highs. I don't like this. Shouldn't really keep up, right? It should just pierce straight to the highs now. Understanding that bulk of the liquidity inside of the session here resides right at these highs here. Now, several things happen here. We filled in this 5-minute fair value gap. right? We came down, filled in midway of this wick on the 15-minute chart. So I really want to see it with those two factors there, trade below this low right here. So now that I'm looking at it, I'm going to go and trail stop. So stop's going to be rested down below this low, and then we're going to wait for the first target to be hit. So like I said, depending on whatever your goal is for today, percentage wise, you can very reasonably take profits right up here, and that'd be okay. And obviously this would offer you about $600 here. All right, so obviously like that expansion there. And I'm not going to aim all the way for London high. I kind of changed my mind. I'm going to aim for this premium for value gap and the closure of regular trading hour gap, this unfilled portion. So right here, this value gap right here, extend that forward. I'm just going to put my sell limit right at the midpoint there. So risk is able to be significantly cut, right? We almost get to that high here, but not quite. We're able to actually take out this opening range high here, right? But we want to see it continue and complete the move above the absolute high, and then get to that, close in the remaining portion of that regular trading hour gap. All right, so ES following suit there, so that's actually great, perfect. And there we go. That's Pierce, beautiful. And let's see if we can get up to that for value gap now and fill in that regular trading hour gap a little bit more. And just a little bit more effort there. There, perfect. That's all I wanted out of the day. So really I was looking for, really my ego would want, to get covered at London high, but all in all, like $1,100, that's more than enough for me. So that's great. In and out, $1,050 flat on the week. So this was obviously my first trade of the week, and we started off strongly with $1,000. So that's good.